What's going on, guys? I hope everyone is doing well this evening. My bad for the delay. I kind of got caught up with some work stuff. Somehow, some way, I got in touch with one of the senior developers at MetaMask. I don't know, that was pretty cool. But yeah, we've been talking and stuff like that, and just kind of like, I just got some pretty interesting alpha here. They're making a Solana-based NFT marketplace competitor, so that's pretty cool. Don't tell anyone. I mean, there's only like three people that listen to this, so it's okay. But anyway, um, yeah. So what has been going down here as of late? Okay, so for the past, I think it was like up until Thursday of last week, price was kind of bouncing within this channel in here. And yeah, I mean, various bullish particular signs here, like a broadening descending wedge, very minute, tiny stuff, like stuff that's like it's weekend price action. So, like I said before in the various pasts, it's not my cup of tea. There's a lot of indicators that say one thing, and then within the next minute does the next. Excuse me. Okay. Anywho, yeah, so we had like a falling wedge, right? It broke through the channel, right? Kind of beginning to invalidate this thing. But the kicker here was this particular, you could argue that this was a triangle formation, and it just broke to the downside and then created this broadening descending wedge. Yeah, from the two touch points of this falling wedge and this broadening descending wedge, created a base here that I was kind of keeping my eyes on. And as you can see, I'm going to put this in yellow just so you all can really decipher it versus like all the other crazy lines on my chart here. There you go. It's a, from my perspective, this is like a broadening ascending wedge. So broadening descending wedges, they tend to break bearish, but there is a percentage of this breaking to the upside over time. Now, um, you could argue that this is a fake out on the 1 hour that just happened here. Multiple touch points, 1, 2, 3, 4, 5, 6. Yeah, so the top side's been pretty confirmed on the bottom. Uh, yeah, on the bottom, I would say, yeah, 2 to 3 touch points here as well. So I'm gonna go off of this for the time being. Now I could probably raise this up a little bit more, but to me, I don't know, because this touch point would be valid, um, but I'm not too sure yet on how I feel about this one. Um, Yeah, but I'm just gonna have to go off of my eyeball test right here. I would just kind of consider this, uh, well, yeah, this could work as well. Yeah, 'cause the top side's pretty definitive from the wick standpoint. I'm pretty sure if I were to zoom in on the 4 hour, just make it way more clear, frankly, in regards to total um, trend here. Yeah, okay, that's valid on the 4 hour, actually. It's even more valid on the 4 hour. Interesting enough. Okay, so I'll just go with that for now. Yeah, it makes more sense. Okay, all right, but yes, in general, when you see this like broadening ascending channel, the volatility does kind of get more intense until ultimately there is a break to the downside. Now, this particular zone here, I can't argue that it's resistance anymore. I could genuinely feel more comfortable calling this support. Now, it's been a little wonky um as of late. Oh, I can't for some reason. There you go. Man, I should have zoomed in earlier. But yeah, I mean, it's creating a higher high from the previous local top. So there's this saying in trading land where it's like, you show me a higher high, I show you a buy. So with that particular logic, I mean, it's really hard to say that this is coming down at this point. Now, what's interesting here is this particular line that's kind of developing as price is, moving on at this time. So, um, you could argue that this within this broadening descending channel is a very, very, very narrow um, rising wedge as well. So it's basically two bearish signs acting out at the same time. Um, Now, as far as resistance is concerned, that's pretty much confirmed on the top side. The bottom side you could argue as well from both fronts. From the broadening ascending wedge here, so for example, if price were to, continue to the upside here and then break, I would see this line of resistance or support at 22.1 as an interesting reversal zone. Um, or if it decides to break down even more, there is confluence at 21.24. So that's rather interesting. I like this rising wedge. Seeing something build up out of it is rather, um, I would say, kind of, yeah, conducive to overall price action. So I'm going to get to I'm going to go with the daily this time around. I haven't done a daily analysis in a few. Oh God, it's going to look so disgusting just because of all the lines, and I have extended lines and all that kind of stuff. Okay, so some friends of mine did point out that this could potentially be a triple bottom pattern or a three rising valleys pattern on a macro scale, and it's already broken out. So that's pretty interesting here. The breakout on the daily was, I'm gonna make it super bright here. I'm gonna make it like this pink so you can see it. Yeah, at 21.6, you could argue that this three rising valleys is already broken out, as well as this symmetrical triangle. I've been calling it a symmetrical triangle for weeks now. And yeah, from a technical standpoint, it's kind of done its duty. You could argue that there is resistance up here where maybe it's not from the bottom over here, it's actually up here. But I would classify this as a higher high. And just as I said prior, you show me a higher high, I show you a buy. So a lot of these institutional traders, I mean, they just went bull god candle. I haven't seen one like that in a while, so I'm actually really happy about it. I want to, not gonna lie, I would love to see one of these bad boys right here, but like, a bullish one. But anyway, um, yeah, as it stands, um, just given the trade action, I would say that this triangle has broken to the upside. Now, I want to see the reaction at 23.8. Not gonna lie. This zone is a pretty key resistance, and I could show you as to why here. So if you go back all the way to, man, 2020 of December, as you can see, this is the last resistance that Bitcoin had until it just ripped. Okay, it just ripped and just continued and, basically kicked off this intense new bull market here. So as it stands, we lost that support. And now, when you lose a substantial support like that, it's going to act as resistance. So I'm curious to see, will price kind of bounce between like, 22.1 and 23.8 for forever? Or will this just be kind of like the rejection point to where we create new lower lows and can we just fulfill this bear flag? But Now, that's kind of doom and gloom, of course, from my perspective, but honestly, this bullish engulfing candle, as long as this bullish engulfing candle support at 20.78, which is basically 20.8K, holds, then we're good. Now, the reason I'm not too worried, and I'm actually more in favor of the bulls making significant moves to the upside, is this. I'm going to turn off the candles so you can see this particular cross. Okay. Um, yeah, this particular 9 EMA and 21 EMA cross on the daily is huge. That just means that the 9 EMA is ready to become support. And you could see that support at 21.248. So even if price comes all the way down to that point, it still doesn't have enough juice to invalidate this bullish engulfing candle. So right now, price is in favor of the bulls. And to be honest, even this rising wedge, even if it broke to the downside, it would come right back to that 20.78 range. Now, the uh, broadening ascending wedge is a different story. So if the broadening descending wedge actually plays out to the downside, then that would most likely fulfill the break of this bullish engulfing candle and just, continue the trend downward. But at this time, frankly, bulls are in charge. Okay, so I'm going to go with the TSI here. Oh my lord. You want to see this zero cross. You definitely want to see this zero cross. Now, I'd feel more comfortable if the slow moving average was the one crossing, but the fast moving average, this is actually a really good news. The like basically positive. You want, if you're a bull, you want TSI to flirt with the positive numbers right now. It's been in the negative for, oh my lord, it has been so long. It has been um oh, I can't, hold on, I have to do it like this. There you go. It has been 96 days, basically 3 months, since price has been in the negative uh, TSI zone. So that's crazy. Okay, so now regarding the market cipher indicator, oh man, I like how the money flow is still continuing that trend of curling to the upside. Um, Now, yeah, momentum's not even close to the oversold zone, so that's cool. That, to me, that indicates more pumpage to the upside. Also, the Heikin-Ashi candles are showing a flat bottom on a bullish candle, so that just means momentum is strong. Okay, so that's cool. This is on a, keep in mind this is on a daily level, and intraday stuff is obviously volatile, and price could dump like 7% and still be bullish, you know what I mean? Now, same as the um, MACD, sorry, same as the TSI. Um, yeah, the MACD is starting to curl to the upside, printing escalating bullish bars here. So that's pretty cool. Now, keep in mind that when the MACD gets close to the zero line, volatility ensues. Okay, so price could swing up, can swing down, but ultimately find resolution and then cross to the upside and then continue that stuff. So it just means that we're probably most likely going to hit key resistance points and it's going to get rocky. Okay, within the coming days, volatility is high. Now this is interesting. This is the closest the slow moving average on the MACD-X has been to the zero line. It's been for, like I've said, it's been forever for the bulls to have taken control, where the slow moving average actually crosses up into the bullish control area. So that's really, really cool. Also, the slow moving average created a higher high from the previous low, from the previous highs, I'm sorry, a higher high in that regard. So that's really nice to see. Now, now the RSI is showing some consolidation, but it's leaving the bearish control zone. We're now in the neutral zone. What I would love to see, not gonna lie, is for the RSI to kind of just consolidate and test the slow moving average as support, and then I would just open a no-brainer long and just like hold it for, the basically for days. That has yet to happen. I mean, this is phenomenal. Like, you want to see this 50 cross. That just means that we're like half, in my opinion, my perspective. Now, this, keep in mind, the 50 line is where the fake out zone happens, right? But once consolidation happens and then there's a true cross up above from the 50 line, that just indicates that we're like halfway in a major pump on the daily time frame. So that could equate to like 30% moves to the upside. Okay, so what is happening here on the TSI on the daily? Yeah, TSI did bounce from on July 12th, basically bounced off of it was rocky, actually cut through it, then came back up. Um, Bounced off the slow moving average, then created a higher low on the 17th. Now we're in the process of maybe even printing another higher low. Now it has sufficiently crossed the 50, so I wouldn't mind the TMA. Did I say the TMA or TSI? I meant the TMA. But anyway, I wouldn't mind seeing this kind of come down in this particular zone at the 50 and then create a higher low there. That would be real nice to see. That's just really constructive for the TMA. Okay, so now I'm going to get a little bit more um, zoned in on the 4 hour. Okay, what does the 4 hour tell us? Oh my. Okay, so there is a buy signal still on the 4 hour. Now, it's not ideal given that it is above the 60 point on the market cipher indicator. I don't like that just because um, yeah, it's easier for the bulls to push price, but ideally you'd be wanting to open up a long in this situation, like more so down here as opposed to up here. I mean, you could still get pretty good moves if you're in a long position, but you're gonna have to wait, and it's kind of like a timing entry type of situation. So I would honestly prepare for more so like pattern resolution. And once there's a decision, because keep in mind, yes, rising wedges are bullish, are bearish, and, ascending broadening wedges are bearish as well, but there are percentages where bulls can actually win. So keep that in mind. It's not definitive, oh, it's a rising wedge, it's going to break to the downside. No, not at all. Like, it just means that it's in favor of the bears position, but by no means is it a guarantee. Okay, so anyway, going back to it, on the 4 hour TSI, we are seeing another cross here, um, but given where it is in terms of position, it is not in the oversold territory just yet. So I can't necessarily call this particular move done. Um, so far, it's consistently created higher lows. So until I see a lower high, and then a lower low and a lower high on the TSI, I can't be completely bearish. I mean, you can do scalp shorts and stuff like that, um, but you know, from a 4 hour time frame, you're kind of missing the boat on that one, in my opinion. Okay, so now let me go to the MACD. So the MACD is printing some momentum dissipation ultimately, but it is above the zero line, so it's just easier for the bulls. It's going to be choppy for price action, in my opinion. It's pretty jagged, the MACD, so I do ultimately expect price to come down lower, but the EMAs are still pretty interesting to see. So let me go with the MACDX here. MACDX is showing a fresh sell signal. Now keep in mind, these sell signals right here was weekend price action. Okay, so I don't, like I said before, indicators on the weekends are close to trash, frankly. Like it says one thing and then it'll do another. Like it just takes a couple whales to really kind of ruin the whole momentum of these indicators and all that kind of stuff, just because the order books are so freaking thin. But now institutions are, back from the weekend, then their money's back in the market. So it's just harder to move assets. So when you see these indicators, it shows something, it's most likely, going to go that way. But anyway, so this is interesting on the RSI. The RSI is acting the slow moving average is kind of acting as resistance. So that's interesting to see. Now, it hasn't printed a lower low just yet. You could maybe argue that this is a lower high, but honestly, before anything, I want to see that lower low. Um, but yeah. Anywho, let me see here on. Yeah, so we finally touched and crossed the overbought territory and completely just dumped to the downside regarding that. Um, there was a hidden bullish divergence that created that pump. Now it is heading to the downside. It's from going from green to orange, and yeah, so usually that leads to red. But we'll see what happens regarding the reaction to the slow moving average, which is that blue line. What else? Oh yeah, I don't think I did the TSI here. Oh, okay, great. All right, so the TSI basically states as long as price is below 22.383, we can expect a continuation to the downside. Okay, so now let's go real hardcore intraday trading stuff. What is the chart saying? Okay, so let's start with the chart candles. All right, so it seems that price is ready to test the bottom side of these supports. Obviously got a pretty intense rejection off of the top side resistance of this channel slash um, yeah wedge. Um, okay, interesting. Um, Yeah, interesting here. Okay, so we still have that higher low situation here, um, but as you can see, momentum to the downside is strong because it's red. And there was an attempt to try to curl price up, but as you can see, it went from green to gray, so bears are still in control here. Um, what else? What else? Oh, what I've noticed in the 1 hour here is we do have a trigger wave on the bull's side, and it pretty much played out, it seems. Um, I'm curious to see how the money flow reacts. I mean, as it stands, if I were to just judge the money flow how it is now, I wouldn't necessarily like it because of the slow sloping downside move. So I'm more inclined to kind of wait for that to kind of give out and give me a better short opportunity. Not financial advice, just my opinion. Okay, let me see here. So this uh, is what's strange is that um, the bars here are showing something bullish, but the MACD is showing something bearish, which is the slow moving average is above the fast moving MACD, and right now it kind of looks like it might be rejecting it, or at least attempting to. Um, yeah, same with the TSI here. So as long as price is below 22.178, you can expect further continuation to the downside. Um, yeah, this is actually the most telling in my opinion, which is the double MACD here, the MACDX, um, because we had this bearish divergence here, and also as you can tell, the slow-moving red line is starting to bowl and curve to the downside. So that because of that, I'm leaning more bearish, and um, you did have a higher high here, but You did have a slightly lower high, so you could argue, make a pretty, I would say, decent argument that there's this like sloping descending line here, so it's just going to be a gradual descension from the 1 hour perspective until it gets broken. But yeah, a cross down isn't all that great. But I mean, still from a local bottom perspective, it would need to RSI would need to print below 43.9 in order to kind of confirm this change. If it's a significant move to the downside, then yeah, the RSI would need to close below basically the 44 point. Okay, TMA actually showed a bearish divergence here, and it's playing out so far. Huh. But so far, I've noticed that these bottoms here are slowly escalating to the upside. So as long as the TMA is above this particular line here, I wouldn't necessarily say that the rising wedge does end up breaking to the downside. So as long as this is held as support here on the TMA perspective, then I I would just kind of scalp inside of the rising wedge as opposed to actually waiting for a breakout short or breakout long. So yeah, not financial advice, but that's kind of like how I see it. Like scalping within patterns is the way to go, and preparing for those breakout moves to hold swing positions is the way to go, in my opinion. That's kind of just how I was taught. That's just kind of like how um, it just, makes sense. Like you want to be in shorter term trades when you know support and resistance, then you know trajectory, and then if you see a huge pattern breakout, of course, then why do you have to scalp it? Why hold your long position for an hour when the daily broke an ascending triangle, or a symmetrical triangle, that could pump to, 30%, 35%, as opposed to a scalp position where you're only getting, you know, 3 to 5% moves. But anyway, uh, okay, here. Um, I'm gonna leave it off at that. I think that was pretty constructive here. Yeah, I hadn't looked at the charts pretty much all morning until now, so I'm getting a fresh perspective. Hopefully this was helpful. I appreciate you guys taking the time to watch this with me and kind of go over the technicals and such like that. Yeah, please like, share, and subscribe if you haven't, and yeah, let me know what you all think in regards to the price action. Do you think this is a rising wedge, or do you think that we're going to be playing out that ascending, broadening wedge? Yeah, any feedback from you guys would be greatly appreciated. All right, take care. I gotta go. All right, peace. Bye.